What if I told you that there is an S&P 500 ETF that returned 150% more than all the other S&P 500 ETFs while investing exactly in the same assets? This is the S&P 500 investing in the 500 biggest companies in the US, but this one ETF delivered over the period of 15 years 150% more than VOO or SPY. And I'm talking about CSPX. CSPX is really one of my favorite ETFs to invest in the S&P 500 in the long term, and in this video I'm going to tell you exactly why. And the reason why is simply because CSPX auto-reinvests the dividends that are paid by these companies. While VOO and SPY gives you the dividends every quarter or so, they deposit those dividends in your account, and if you really depending on that money, you like to see the dividend money coming to your account and you need that money to pay the expenses, that's okay, and you can continue using those ETFs. But if your priority is capital gains, CSPX is much better. And let me show you the chart here so that you can see exactly what am I talking about. So here you can see over the last 15 years, VOO, the regular S&P 500 ETF, delivered 466%. Not bad, but CSPX 613%, because CSPX auto-reinvested the dividends and it allows the compound effect to kick in much faster, delivering much better results. And of course, if you need the money, you can always sell a little bit of CSPX. I personally prefer not to receive dividends. I prefer them to be reinvested automatically because it grows my investments faster thanks to the compounding effect. Like Albert Einstein said, compounding effect is the seventh wonder of the world or something like that. But the point here is that if you want to receive dividends, you also need to pay attention to the taxes that you pay. Where I live, I pay 30% tax on dividends, while I pay 0% on capital gains. So for me, it's really a no-brainer choosing CSPX over VOO or SPY, because when I receive dividends, I pay 30% tax, but if I reinvest those dividends automatically, and 1 or 2 or 3 or 5 years later, I sell some of my ETFs, I don't pay any capital gain taxes. So you should also take a look at the tax laws in your country and see what's more advantageous for you. Is it to receive dividends, or is it to sell and eventually pay capital gain taxes or not? It really depends. So I'm not a tax expert, I cannot answer that to your country, but what I know is that I like that compounding effect of reinvesting the dividends. Here in the chart, as you can see, the orange line CSPX goes up much faster, and at the end of 15 years, it's a very significant difference, right? It's a 150% difference, okay? So if you have invested initially, let's say $100,000, at the end of this period, you have $150,000 more by investing in CSPX. Alright guys, I talk about many more ETFs and leverage ETFs and stocks and tech stocks and the AI in my community in the Henrik Wells Academy. If you want to learn more, you can check the link in the description of the video, and in the meantime, give it a like and subscribe so that you don't miss amazing content like this, and I'll see you in the next video.